Welcome back, everyone, to Vox Markets. My name is Paul Hill. I'm delighted again to be able to speak to CEO Ian Strafford-Taylor of Equals Group, a leading international e-payments and fintech platform. So welcome, Ian.
Hello. You did all that without taking a breath, Paul. I'm very impressed.
Thank you. Well, big congrats on today's excellent trading update with sales up 59% to £69.7 million. And I actually do notice that Canaccord, as we entered the year 12 months ago, had a sales estimate of 47 million. So you've come in sort of like 22 million pounds higher. So that just shows you've had four positive profit upgrades, which again you've done today. So maybe we can start there. What's sort of been driving that sort of top line growth?
Well, firstly, actually, I mean, anyone internally will tell you, I was a little bit like a bear with a sore head because I really wanted to do 70. So 69.7. Oh, yeah. And those 3 days between Christmas and New Year, I was in the office every day, like,
yeah, exactly.
But it's and we'll come on to the sort of the revenue format of it a bit later. But it was amazing how quiet December was. Generally, I think we all felt it from about the 21st onwards. Wasn't really a real month. So yeah, no, I mean, we're delighted. I mean, those numbers when we started the year, I set internally a stretch target that to everyone in the office that if we could do 60 million, that would be amazing for this year. And here we are, the neck end of, I'll call it 70, I'll round it up. So it's fantastic. And as I've said, and in fact, we've upgraded from the trading statement we did about a month ago. So the profit's even higher than we expected, which is great. And it's a similar story in that the core businesses, if you want to think of it like that, international payments, all the card businesses and the banking platform type business have all done well. And then you overlay solutions on top of that and you get the supernormal growth that we've seen this year and indeed last. So absolutely delighted.
Well, you've got also sort of a lot of sort of like sequential growth, H2 to H1, and I did notice it's sort of 22%. In H2, you did £38.3 million. Can you just talk through that? Because obviously you're a payments business now, rather than sort of like a sort of forex trading business or helping your clients sort of put that sort of stuff. But I guess you may have seen probably a bit of sort of like Trustonomics effect coming into September, which had pulled forward a bit of Q4 revenues.
Yeah, it's interesting, isn't it? Because we've done, the B2B from B2C pivot. And as I've mentioned before, we're pivoting away from being a product business more towards being a platform business, which will be steadier revenues. However, a big chunk of our revenues still currently come from international payments and that type of activity. So for sure, what happened in September, we had some big days then. Because,
it was extreme, to say the least.
Yeah, I mean,
we went through our prime ministers and chancellors every single minute.
Bonkers volatility, but what I don't want investors to think is that, we're taking risks for a start, because we're not, not even any particular second derivative risk. So, we're a different animal than certain other players. But if the pound is going massively up or massively down, as happened, then people who are, let's say, they're dollar buyers or they're dollar sellers, they'll do a transaction then to take advantage of the rate rather than wait. And it could even be, they know what they expect to be buying in dollars for the next 12 months. They might lock in a 1 year forward then and draw down over the next 12 months, which means you won't get transactions from that same client for the next 12 months, whereas maybe you would have done in normal, more stable times. Yeah. So what that does is tend to suck activity into the sort of vortex of volatility whilst it's happening, and then you can get a quieter month or two thereafter. Yeah. Which is why I'm not a fan of looking at our business growth percentages month on month for sure, or even quarter by quarter. I think it can be distortionary, and what we should be looking at is the overall trend. Also, increasingly now, and I mentioned that solutions provides that supernormal growth. You know, the next leg, which we've talked about for a while, of solutions growth is connecting with larger enterprises via APIs. We have 4 currently in beta test right now. And so we'll get another surge from that, if you see what I'm saying, but it won't all just be nice, smooth, and a graph that's always like that. Like, business is never like that. And so I do counsel people against making assumptions based on quarter by quarter numbers, because I think they're missing the point of the trajectory of the business, not just financially, but what's going on beneath the hood. And that's what people need to understand.
And those APIs, is that sort of connecting with likes of SAP and the other big ERP platforms for corporates? Is that
not to them so much, but it's just a normal solutions customer that would rather consume our platform via API than logging into a platform. So, you know, they want to run it their end. So it'll be other financial institutions that don't have the capabilities that we have. And it's interesting, actually, if you think, okay, we had Equals Connect, which is providing white label services towards other FX brokers. And then we'll be doing the solutions type stuff via API. And it all actually comes together, because ultimately we'll be able to offer all of our platforms directly, white label, API, however you want to do it, which just gives us massive amounts of capabilities and opportunities to sell, and widens our addressable market. So this is why the tech side of everything is so important. You know, I know people in some ways would like to see us maybe spending a bit less on tech, but I'll defend that every day of the week, that our advantage and where we are now is because of our investments that we made over the last 3 years into technology and connectivity. This is what we're now bearing the fruits of.
So just on that, Ian, in terms of the sort of like the demand at the coal face, how does it split between sort of like new customers and upselling, and, you know, upselling those new products and stuff to existing clients?
Good question. I mean, it's clearly both are very important. And what we invested in the last half of last year, we've completely retooled our growth team, made some exceptional hires on digital channels and affiliates, and a lot of traction there. And a lot of that tends to be targeted at your current customers in terms of getting more out of what various descriptions, people call it a back book or whatever. But the new side is the focus, because on the solution side, there's so many use cases for what we do, and it's expanding. And as we just talked about on the APIs, we've now got more ways to connect to bigger opportunities. So we're in the process of hiring, and have hired some very good people on solutions. Rather than hiring FX salespeople, what we're doing is hiring people who work in those verticals that we're trying to attack. So let's take fund administration. Far better to have someone who can go into a fund administrator and go, I know what problems you have because I work in your industry, and this amazing company has a solution for all of that, than have some generic salesman go, what are your problems? Please tell me. So that's the way we're attacking this, is hiring people with expertise in the various verticals that we're going after. And so I'm very confident about our new customer acquisition capabilities in 2023 and beyond, which will power the growth even further. Yeah.
Well, you just explained what you were doing between Christmas and New Year. You were coding, weren't you, to put in some new sort of technology?
I was just being mean, if I'm honest. Come on, get in the office. It's not a holiday. What's wrong with you?
And anyway, regardless of sort of like the increase, sort of like, you know, the continued investment in your platform and in your technology and your hiring, etc., you did get some pretty good operating leverage coming through, because your EBITDA margins improved by sort of 200 basis points year on year, and outticked, you know, as an increase between your H1 and your H2 as well. So can you just talk through that, how you're seeing that going forward? Because that's pretty, you're increasing the top line, but also increasing your margin. What's dropping through to the shareholders?
Yeah, We've spoken at length about operational gearing, and as you mentioned, it could have been higher, because we are continuing to invest in people, which drives up immediate cost now, but will bring way more revenues in the future. So it's just a consequence of, I hate to go, saying the same story, but it's the investment we made, because you're yielding the efficiency benefits, if you will. And the roadmap that we have for this year and beyond is very exciting in terms of new product, but also in terms of more efficiency that we're investing. It's very easy to build shiny things that create reconciliation nightmares down the end, but we don't put new stuff in until every area of the company is happy with it, sort of finance, compliance, risk, so you don't have those issues. And we've got some legacy platforms that we'll be getting rid of. So all of that aids even more operational gearing as we go forward. So I expect profits to outperform the revenue growth, to continue to do so.
You're saying
I think actually also, we are transitioning. I think maybe investors are looking more at the bottom line than the top. But before it was just, as long as your revenue is growing, fine. But now, it's important that we keep churning out the profit growth, and we set the business up well to do that. I think the other thing I think we should possibly mention is we're still very UK focused in terms of our marketing and where we get customers, and so will be looking to expand more in terms of overseas capabilities, whether that's representative offices or whatever, over the 2023 and beyond.
And would you do that through sort of like M&A, likely, just to get into sort of like if you wanted new licenses?
If the right opportunity came up, for sure. We are good at acquisitions. There are many businesses that don't grow that way. We've done quite a few, as you know, and we're accomplished at it. It is a skill, actually, to absorb a business, bring it into one culture, make people feel welcome. The Roqqett acquisition, by the way, we should mention with Roqqett, the fact we got that FCA approval through so quickly.
Yes.
It staggered me, actually, which was amazing. The way that's working with those guys, admittedly there's only 7 of them, is just fantastic, because we have a way of processing acquisitions. And
what is the integration sort of pathway for that? Because obviously you've only just really officially handed the keys over, so you've only got it for 7 days.
First key milestone will be to get the Roqqett application into the FairFX currency card application, such that our customers can pay using that or a debit and credit card. And that's the kind of proof of concept. If you think of the Ocado example, they can show it works, and then they can sell that capability to other people. That's the first milestone. And so I'm sure the Roqqett management wouldn't mind me saying, to some extent, because there's massive ideas that we're trying to do too many things at one time. Now it's laser focused, do that, then we'll do the next thing.
Well, you've got the customers, haven't you? I mean, let's be clear about it. It's bolting on excellent technology to steadfast customers who are already thoroughly and delighted with the service.
I'm really excited about it, I have to tell you. It's cool tech that widens our participation in that whole value chain. We go that next leg, in that we can offer our customers the ability to get paid by their customers in an innovative way that they wouldn't. Let's be honest, MasterCard, Visa have a duopoly, don't they? And
it'll save them a fortune, your clients.
Save them a fortune, they get paid quicker. So working capital wise, it will also save them a fortune.
Well, just as a data point, I was talking to a local landlady around here who does Airbnb, sort of like lodgings, etc. And she stopped using credit cards for accepting people. She actually takes cash or bank transfers. This would just be perfect. And the reason why she has is she doesn't want to pay the 3% fee. Simple as that. Yeah,
and get paid 3 days later.
Yeah, exactly. So, I'll give her address to you later on.
Okay. As long as you don't want commission, that's fine.
No, that's fine. That's fine. No, just shifting gears to the consumer side. How's that one doing? Obviously, majority of the business is B2B, but obviously...
we deliberately... I don't want to demean it by calling it a mature business, but that's kind of how we run it. We put enough horsepower behind it that it turns over okay. I mean, we had obviously some super normal growth in the Fair Effects cards because 2021 and 2020 no one could travel, or it was far harder to travel, so we had the COVID effect. So that obviously rebounded strongly last year, but we don't, we could spend a lot of money trying to grow that, and that wouldn't impact top line, or more importantly bottom line, as significantly as putting that money to work elsewhere. So we're constantly looking for ways to automate more of it, have the marketing that supports it more automated. There's still, it makes good money, and it's a very useful adjunct to the business. If we're going to a corporate and we can offer all this clever stuff with Equals manual solutions, but also why don't you use the Fair Effects card for your staff? We can put a link on there that it doesn't charge an FX spread, so it's whatever they want. It's another hook into a company. And you'd be surprised at the number of referrals we get out of having that B2C side of the business that then pollinate into the B2B.
Good. And on the other side, you're obviously generating a lot of cash, underlying, etc., organic, etc. How are you going to deploy that going forward? Obviously, you've got some organic growth investments and some new products and stuff, but any more sort of like, small bolt-on deals, maybe?
Well, if I had any that I was
okay, you'd have to kill me, I know. Yeah,
could I? But suffice to say that I do like the M&A path. I don't see it as an either or. I would like to grow organically and also by acquisition. And you mentioned, would we use M&A to penetrate overseas? Yes. And similarly, if we see businesses, I guess we're pickier now. I'd look to buy a business that added not just pure numbers, but also people that were a good fit, if that makes sense. You want, it's hard to go and hire good people, but you can sometimes get good people by buying a business that has them already in it. We're not.
Watch this space.
Yeah, well, I mean, we're not yet at a stage where, we could pay a dividend. Do I think that's the best? Do I and investors generally think that's the best use of cash right at this moment in the growth phase? I don't think so.
No, you're generating a return on capital employed far in excess of what shareholders can generate with an extra couple of pennies on the dividend. So it makes total sense. Just in terms of sort of like next year, then obviously you're exiting on a pretty strong foot. You've got increasing revenue per working day. You've got more clients upselling, got better and good products and services. How are you seeing sort of next year this year, 2023?
We're very optimistic. Let's be honest though, we are living in very uncertain times, and so we will be cautious about what we say and what we do. But when I look at everything that's going on, I'm optimistic about what we can do. So we've got sensible numbers out there. We hope to beat them.
Good. Okay. Well, I've upgraded just for investors, I've upgraded my numbers. I've got revenue going up sort of 20% to £85 million from just shy of 70. And EBITDA going up just south of £16 million from £12 million. So let's say my fair value is £1.60 per share. So anyway, that's my personal, and you never know, you might be able to blast that one through, but we'll wait and see. I'm an optimistic guy.
If you looked at 2021, took out that material trade, we did 42.5, and you're saying 85 for this year. That means we doubled in 2 years.
Yeah, no, it's fabulous.
It's quite a sobering way to look at it, isn't it?
Yeah. And obviously, you entered the year 2022 with estimates for that year of 47. So, and you came in with just shy of 70. So really good. I noticed
honestly, that 300 grand is going to bother me.
It doesn't bother me. Ian,
it
don't
really
worry.
bothers me. I don't think it'll bother, but I like round numbers.
Yeah, exactly. Yeah. In terms of news flow, then I guess you got your prelims towards the end of March.
I think it's 27th off the top of my
Yeah.
head, but we really need Mr. Cooper for that. And yes, so we'll have those out then. So the normal reporting news flow, I'd expect there might be some other bits of news, here and there. It's normal, isn't it? I mean, we have a lot going on. I mean,
yeah,
in a good way. I mean, we've now, as you know, the exec team's been rounded out, and the level beneath as well. We've got very strong bench strength in terms of management across the business, and all the way down. As I do my fortnightly all hands, and the people in some ways who have the worst job with the customer services people, but they're all part of it. And what I keep telling them about the solutions revenue, for instance, is that's not a new product that's some kind of glamour superstar thing. It's actually an amalgamation of all the other bits. We couldn't do solutions without everything else. So that starts at a customer services person that's just joined, all the way up to the exec. It's very much a team game.
Yeah. Well, it does sound as though you're certainly getting got the right culture there, so that's great to hear. Well, we've whet my appetite to touch base at the end of at the end of March, and if there's any news, then that would be great as well. So thanks for your time, Ian, and look forward in speaking again in a couple of months' time.
You're welcome, Paul. Thank you very much.